Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Hey everybody, welcome back to another episode of Where Should I Invest? So I've got some exciting news. The demo has been done on the Burlington property, and these guys are actually pretty fast. I've hired some contractors. I haven't worked with them yet, but so far they're super impressive. They had everything knocked down and also all of the framing done within like 3 days. So they're pretty good. This reno should be done. My thoughts are mid-March, and that's what they mentioned. Yeah, no, super cool. They're sending me some videos of the progress throughout, and this is one of the big renos that we've done. Sometimes we find some burrs where there are less renos needed, but this one is a pretty big job. So originally we wanted to move into it. Now I'm not sure what we're going to do. I think we're still going to move into it, but we're looking at all the different options of what we want to do. But super excited. And guys, if you haven't been to the right club, when you are listening to this, there is going to be an amazing event coming out. And January 30th will be an event with Harry Fine, who is a former adjudicator. And we had him last year at the right club, and just amazing content. If you ever wondered about the Landlord-Tenant Board and the Residential Tenancies Act, this guy used to be there and spent his career there. Really, really interesting, has lots of great stories, and just some really great insights for landlords. And we've also got another amazing speaker that day. And then our next event after that is February 25th. And I'm actually going to be speaking on stage February 25th, as well as Andrew Hines. So I'm going to be speaking on the BRRRR strategy. Andrew is going to be speaking on student rentals. And January 30th, depending on when you guys listen to this, Brian Hodgman is also going to be speaking, great mortgage broker as well. So lots of fun things. And hopefully soon our online Right Club portal is going to be ready for all of you guys coast to coast listening to this to also have access to investors across the country. So super excited about that. And guys, if you have an interesting, cool idea for a podcast, send me an email and let me know. I'd love to hear about it. Sarah@sarahlarbi.com. You can go on my website and let me know what your thoughts are. And there's actually a really cool little spot where you can speak into the microphone and ask your questions as well. So I've gotten a few replies from that. That's pretty cool. I think it's like SpeakPipe or something like that. I think that's what it's called. So love that. And what else is going on? Well, we got a great speaker today, Gabrani, who has been in real estate for quite some time. He has an amazing story, and in his story, real estate helped him survive through a pretty horrible tragedy that you guys are going to hear about. And because of real estate, he was able to continue and be okay financially. And I won't let you guys know what this is because we're going to talk about it during the interview. But it's quite remarkable what he went through and how real estate has helped him through a really hard time. So I'm excited about this podcast. Hope you guys enjoy it too. And if you wouldn't mind leaving a rating and review, that would be amazing. Thanks so much. Hi, Jay. Welcome to the show. Super excited to have you on. How are you?
I'm doing great, Sarah. Great to be with you.
Absolutely. Now, we met probably a few months back at a mastermind dinner that I believe that's where we met, that
Yes.
Jay Wong was hosting, and we started talking about real estate because that was the topic. And you've got such a great story, and I wanted to bring you on so that you could share your story with the listeners. And so I'm super excited about that today. But first and foremost, who are you? Like, for the listeners that don't know Jay, who is Jay?
Well, Jay, I'm a single father of 3, live in Oakville, Ontario. Been real estate investing basically since my first child was born back in 2005 is when I jumped into the world of real estate investing, because after I held my son, I just realized that, I was doing okay as a bachelor, but you have to build for the future. So lots of business experience, lots of real estate experience. So I'm hoping to share a lot of tidbits with your audience today.
Amazing. So I live in Oakville as well, so we're probably fairly close to each other.
Yeah, right around Bridge Road and Third Line. I'm a little south of the QE, yes.
All right, so I'm probably like 5-10 minutes from you, not even.
For
Just
sure.
on the other side, other side of the QE, but still on Third. So,
Perfect.
so you got started in real estate when your son was born. Talk to us about how you got started, what your first investment was.
Sure. So basically, he was born in August 2005, and I started, joining some networking groups and stuff way back then in 2005. I actually studied for about 18 months before I made my first investment. And my first investment was a doozy. I'm sure there's members in your audience who are a little bit older who started investing at the credit crisis, 2007, 2008. My first investment was in Edmonton, Alberta, Canada. The area at the time was super hot simply because the price of oil had risen to like $135-ish. But basically, Sarah, you could not have bought any higher than I bought. I was buying 3-bedroom townhouses in North Edmonton for about $275,000. Credit crisis hit, and literally within what seemed overnight, but was kind of around 6 to 8 months, they were below 200,000. So I actually did not do well in my first investments, but I also realized that I had spent a long time training, learning, and I'm a believer in that even bad experience is better than no experience. So I took that and I just switched strategy after some Edmonton stuff, and I switched right here to Oakville back in 2009, 10, and 11. Started acquiring buy and hold properties. I invest in 3-bedroom bungalows on 60 by 120 foot lots, and I rent them out to families. And that's kind of been my plan since 9, 10, 11. I brought in joint venture partners because I ran out of money after my Edmonton investments. So I brought in some joint venture partners. We built a nice portfolio, and things that we were buying at 350 to 400 are now in that whole 800 to 900,000 area. So yeah, love real estate investing. I'm a firm believer in it. It's the best asset class for people to secure their family long term, and just really enjoy it. So please feel free to ask whatever questions about real estate. Definitely.
Awesome. Yeah, I do have a lot of questions. So are you still actively purchasing at this point, or are you just kind of managing what you've got?
I manage what I got, and I hadn't purchased for years and years. Basically, I was on like a 4-year sabbatical from everything, 2014 to 2018. So I actually just made my first purchase back, literally just got the keys like last week. So yes, I'm starting back into it. Much easier now that you have results and that you can show people exactly what you're doing. But I also, I'm very selective now. I do believe in focus. So I focus in this area. Literally the area that I invested in Oakville, Sarah, was, you'll know it. It is a little rectangle, 3rd line, 4th line, Rebecca and Spears. All of my properties were in there. I lived in there with my family. So it's a little tough to find the buy and hold to use that model here now. So basically, I will be coming up with a new area, new presentation, new everything, and we'll concentrate in that area. Haven't decided yet about what that is, but my purchase was it was a condo, like more of a potential retirement thing. That's a long-term play. I'll be renting it out. That actually was in Mississauga, where I grew up. But outside of that, we'll be actively investing.
Okay. Now, is this with a joint venture partner, this new purchase?
No, this one is not, simply because I used real estate to take that sabbatical. I cashed a couple of properties. There was some very substantial equity appreciation. So I just used that actually to buy. So buy with a mortgage. So no joint venture partners on this one.
Okay. So obviously you really understood a gray area, because now to get into that 3rd line to 4th line and Spears to Rebecca,
yes,
even a small tiny bungalow, like you just the land on its own, I feel like is 800,000-900,000 just
it
for
is.
the land. So you definitely did really well. Now obviously, cash flow is important. I'm a big believer in that, but I really do believe that you make your wealth when it comes to buying in the right market and holding on for the long term and getting that appreciation mortgage pay down. But were you cash flowing on those properties back then?
In Edmonton, no. In Edmonton, things were just so hot back then. Like literally through all of 2005, 6, 7, properties were going up like 5,000 a month. So everyone believed that that party would keep going. So like I said, I bought in right at the top without knowing. I didn't know what was going on above me in the world economy and stuff like that. But so those ones did not. Oakville did. Things we were buying for like 350-ish, 400 bungalows. We were renting out back then for 17, 18, and one case 1900. So we were getting 150 to 200 bucks. But I agree with you. We didn't even take that cash flow out. Like that cash flow sat in the reserve account. It just kept building up. Because in this game, I'm sure a lot of your audience knows, like when you get hit with a repair or renovation, you just need the money. So my partners and I made the agreement that, yeah, we're going to keep paying down all the mortgages. We did that very well. And we just kept storing the cash flow. And that was it. But yeah, the equity appreciation, your time in the market will definitely be much more impactful than your certain timing. That is 100% true.
Absolutely. Now, I love real estate, but it's not necessarily so much about the real estate itself. It's about, the freedom that it brings and the opportunities that it brings for the lifestyle, or, the things that matter more than just money and real estate. And so how has real estate helped you?
Oh, goodness gracious. Basically, Sarah, I mean, like, I don't know what I would have done without it. Maybe we'll just get into the reason of the sabbatical.
Sure.
So, got married 2004, right? And 3 kids, 2005, 2007, 2009. So let's just say that while we were building that real estate portfolio, it was really, really busy at home, 3 young children. It was a traditional household there. I was kind of the outwardly focused spouse, business, real estate, entrepreneurship. And my wife was internally focused, busy, 3 kids, domestic cycle. And I'm going to take you back to 2011. We had just come off a stint where we bought 3 properties in about 16 days. We closed 3 properties right here in Oakville. Very hectic, very busy, like extensions and all kinds of stuff needed. Had to move mortgages around between joint venture partners. It was quite a bit of stick handling. And my wife, unfortunately, had a slip and fall in 2011. And she went to the doctor the next day, and the doctor prescribed her Oxycontins. Now, I don't know if you know anything about that stuff, but it's super nasty, super addictive. And unfortunately, my wife developed an addiction to these things. You throw in the fact of there's 3 young kids at home. There was some postpartum depression. Let's just say it was a very bad, like, Molotov cocktail of things. And a 3-year run, Sarah, from 2011 to 2014 was not very good. Basically, when we were supposed to be building even more, we were at 11 properties by 2011. And my business plan was to take it up to about 25. But once she kind of had that slip and fall, started taking these pills, then it was really, really bad. And unfortunately, in 2014, she basically decided that she didn't want to be here anymore. So I talk about this because I value genuineness very, very highly. People go through lots of things in their own lives. Your audience members, they know they have issues going on in their own lives. Everyone faces them. So I share it so that, maybe someone else doesn't have to go through it. But after she passed away, remember, I was the outwardly focused spouse. My children were 5, 7, and 9 at the time. So I basically had to shut it all down. I was running a marketing agency back then, and simply had to call my clients up and just say, sorry, I can't do anything. I need to internally focus. So from that 2014, I thought maybe it'd be 1 year off, 2 years off before I went back into business. Turned out to be 4 years. That whole time, it was real estate that supported me. After what, like literally maybe a few months after it happened, I refied a property and put that money in my bank account. And I didn't look at it for another 1.5 years. And then I ended up selling a property, and that money kind of sat in the bank account as well. So if it was not for real estate, Sarah, I get asked, what would you have done if you didn't have real estate? And I'm just like, I have no clue, right? So I don't know what would have happened. So I encourage the audience, if you're sitting on the fence about, about real estate, about starting, get started. Plant your seeds, because, the vision boards and all that stuff. Yeah. Not once when I was doing those vision boards did I ever say, I'm going to need real estate in case my wife passes away. right? But that's exactly what happened. So I owe everything to real estate because if it wasn't that, I don't know. I doubt I would have been able to take any sort of sabbatical. Who knows how my children would have adjusted. But because of real estate, I was able to take that 4 years off, take my kids to school every day, and just concentrate on them and me. So that's the answer to real estate. So it's vital for me. It was vital.
Absolutely. I mean, that's just, I mean, I'm so sorry, obviously, to hear that. And I've heard your story, and I know we talked about it a little bit as well. And, you know, but thank you for sharing, because I think it's, first of all, I have a bit of a background in nursing, and, you know, that whole Oxycontin is definitely not something that you want to, you know, get addicted to, but as things happen, you know, it's good that you had real estate to be able to have a fallback to say, you know, I need to figure out what's important now at that point in time and take care of your family. And, you know, it's amazing that you were set up ahead of time.
Yep.
You know, there's obviously horrible things that will happen, and, you know, you definitely faced a huge one. But, you know, for those of you listening at home too, like, you could be sick, you could be diagnosed with something that will prevent you from working, or will prevent you from working in the current job that you have. And so I think, you know, and it's hard to say I'm going to plan for these eventualities because they're horrible to think of, but unfortunately they happen. And so, you know, in a way, I'm happy to hear that you were able to continue and do what you needed to do for the family that yet you had to keep supporting, and that you were able to do it. And I think you've also created something really great right now for a support group for others. Can you talk to us about that?
Sure. So basically, obviously, along with the emotional mourning and everything that you go through when a spouse passes away, one of the other roles that I had to take on in that year is we did have wills. We were set up for that, like way back when the first child was born. I was the executor of her will, or her estate. So, sir, a little background. I went to the University of Waterloo. I'm educated as a professional accountant. Okay, so I don't practice anymore. I don't use the thing anymore. But you would think that as a professional accountant, as an entrepreneur for 20 plus years, my entire adult life, I've only worked for myself. I have not worked for anyone else. And as a real estate investor, you would think that with all those skill sets, you know, handling paperwork, going through an executor, all that stuff would be okay for me. I'd handle it. But I actually had a horrible time with it. And then I started asking other fathers, right? Just because it was my experience. And I just, you know, like the chats you have, I said, what would happen if something unfortunately happened to you? Would your family be prepared? Would your family know what to do, etc.? And Sarah, the answers for almost everyone was no. Like, they wouldn't know what to do. I don't have my stuff organized, etc. So when I decided to come back kind of to the world of business in 2018, I decided to open a company called Prepared Fathers. And Prepared Fathers is all about empowerment. We empower fathers financially. So again, any of the things we're going to talk about, they apply to everybody, obviously. But right. I just happen to choose that niche because I'm a member of that niche. And Prepared Fathers, basically, we do, like, you know, some coaching programs. We have quite a few checklist free stuff. So we always want to, like, add value to the market and then decide and determine how we can help fathers. So that's been basically since right at the beginning of, or late 2018, early 2019 is when that started.
That's amazing. I'm happy to hear that. So I do have some questions about that. Like, what are some of the things that you help them prepare? Like, give me some examples of maybe something that we're not really thinking of, but if something were to happen, we'd have to deal with, and what you see the biggest struggles are.
Yes, great question. So basically, for fathers in particular, once again, applies to all parents. The deficiencies where I see kind of a lot of people, only 40% of fathers have a will. Okay, so let's just start with that. It is vital. If you have assets like the audience has, real estate, etc., and you have children, especially, if you have those two things, I can't stress enough, it is vital that you have a will. Simply because if something happens to you, then first of all, the government is likely to take a higher share of that estate tax, probate tax, when someone passes away, if your wishes are not determined on paper in a will. And secondly, and this one's pretty well guaranteed, it will take longer for your family to regain control over those assets, for the government to kind of release them after they look at everything. So obviously, if something happens to you, then they're going to be dealing with emotional stress, but they now have to deal with all of this financial stuff on top. So when I encourage people who want to be a prepared father, it is, you got to have the right conversations with your stakeholders, your spouse, your estate lawyer, your executor of your estate, etc. You obviously have to have the assets, which is what you teach and your group teaches so well. You have to build up your assets, and then you have to have your paperwork. So conversations, assets, and paperwork. If most people can just kind of get through those levels, then they get from what I'll call financially maybe ignorant or negligent to financially prepared. And your children are worth it. So basically, that's the attitude that I have. So that's the starting point. That's the kind of preparedness side of empowering fathers. And then it's just a matter of my specialized coaching is actually in widowers. Okay, so fathers, like they're widowers, they need to get their financial house in order. Like, especially if their spouse was handling the finances and they become a widower, like they're lost. Like they're completely lost. So my coaching specializes in widowers because, once again, I do believe that if you're a member of the market, it's a lot easier to serve that market. So unfortunately, at 42, I became a member of that market. And that's kind of where I specialize. But we also have lots and lots of free checklists, how you can manage your finances on your smartphone, Father's Guide to Financial Preparation. We have all these little kind of checklists and magnets where that's the stuff we give out for free because we want to impact people. Whether they invest with coaching or anything, that doesn't matter. It's getting the message out there. And hopefully fathers can just kind of realize that it's so important about the stuff that I'm talking about. Because I don't know about you, but I never got trained about any of this stuff in school.
No, absolutely not.
So basically fathers, the ones who handle, again, whoever handles the family finance, doesn't matter fathers or mothers, but whoever handles it, unless they were professionally trained, no one taught you this. But we live in a first world country. Money is necessary. It's right below oxygen. So basically, that's what I teach. And I realize that fathers, some brilliant guys, like doing some great things, they don't have a clue. So that's who I look to help. And that's the type of stuff that we talk about. All kinds of things when it comes to financial empowerment, all kinds of different levels. That's what we specialize in.
Yeah, that's really great to hear that. So when you were talking about the will and not the will and the government releasing, like it just kind of makes my blood boil a little bit, right? That they have so much control over everything. And so what happens, as an example, if somebody has joint accounts?
Yes. Oh, that was exactly one thing, Liz, that we had joint accounts. We also had separate accounts. Simple things. I didn't know the password to her accounts. I didn't know where her safe deposit box keys were. All right. She had a safe deposit box and the bank put me through like literal hell to open it. All right. So I couldn't find the keys. So there's a lot of these little aspects that we would never consider until we're unfortunately in the middle of it. So I went and decided to pull all that stuff out to help people get prepared for these types of things so that they are organized, right? That their stuff's in one place. So it's brutal. And yeah, that stuff is still in your control. As long as you're healthy and able right now, again, please, if you have children, you have assets, even if you just have assets, get a will, definitely. It will be very, very helpful.
Absolutely. That, and then power of attorney, and what happens if you are just a vegetable on a bed, right? And just figuring out somebody and what the protocol is and what you want done. And there's really so much to think about. What about insurance? Oh, sorry.
Power focus. With the powers of attorney, by the way, I want people to realize that you can have a financial person as a power of attorney. You can also have a health-related one. And they don't necessarily have to be the same person, right? So I wanted to make sure that your audience knew that when they're setting that up. If you have a friend or someone in your family who really knows about health and your health conditions, they're the person that you want the health power of attorney to, right? Because they can help make decisions for you. But people should just be aware of that. So sorry, I cut you off.
No, that's really good. I actually didn't know that you could have a financial one and a health one. And it might actually be easier potentially to have two separate ones rather than one.
They might not know, right? Like me personally, if I was someone's financial power of attorney, I can handle that now. But don't ask me to be a health one. I don't know enough about it or whatever. Don't have enough knowledge. So yeah, it's a great example. But yeah, you can definitely do two separate.
That's great to know. What about insurance? What are your recommendations or your thoughts on that?
Okay, so this was one of my like massive mistakes, is that when I was younger, you know what, when we got married and we started building real estate, the conversation of life insurance came up. But I unfortunately did not have any life insurance on my wife. So it was one of those things where I never imagined in a million years that she would, like, physically, Sarah, like, healthy, super healthy. Yeah, the body obviously went through massive changes with 3 kids, but that was a big mistake that I made, right? I had the conversation about it. I sat down with brokers about it. But, you know, sometimes you just don't take that last step and you actually do the thing that you're researching, etc. So I leave it. But see, on the other hand, I knew I was building real estate. And that's exactly what happened. When my wife passed away, the sabbatical was funded by real estate. There was no life insurance. So that's a big mistake that I made. Again, I share it because hopefully that will add value to the audience where they don't make the same mistake I did. But yeah, let's just say that, you know, 500,000, $1 million approximately didn't end up in my pocket, you know, after the situation. But I highly encourage, especially if you have young children, especially if you are the primary breadwinner in your household, then I would definitely recommend that the life insurance level should be, this is my rough rule of thumb. I haven't talked to this about any broker per se, but I looked at it and said, what would I need? So if you have a primary residence and you have a mortgage on that, you should basically try and get coverage at a very minimum to pay off that mortgage. You can get it through on your mortgage application as well. You can apply for the insurance. And if you have children under 25, then basically you would know the cost per living per year. Let's say it's $25,000 per year for each child. You have 2 kids under 25. I would multiply those, how many years you would need, times the 25,000 per kid, and add that on top to your mortgage amount. That should give you a rough rule of thumb of the amount of life insurance that you would need. It's rough, but I highly recommend people talk to their brokers. And in terms of other types of insurance, yeah, like disability insurance, etc. As an employer, as an entrepreneur, there were not robust programs available when I started in business. Now that has changed. Because yeah, like if you said earlier, if you get hit by a car or you become a vegetable, life insurance is going to do nothing for you. Right? You won't cash because you're still living. So yeah, you need disability, but I definitely recommend you get some life insurance, even if it's just something for until your kids are older and you get some mortgage pay down. Then maybe you don't need to keep doing it if you build a portfolio. But I definitely recommend the insurance because that was a big mistake. That was probably my biggest mistake, is not having life insurance.
That's really interesting. Now, you did talk about mortgage insurance, and to me, there's definitely some pros and cons. And like, I am not a broker. I did do my license back in the day, and I was a financial advisor for a very short stint. But here's my take on it. And like, you know, everybody needs to go out and get their own opinion. But I like term insurance because they underwrite prior, and the amount that you get, the 500,000 or the million or whatever that is, that's what it is. I have an issue with when it comes to mortgage insurance because they don't underwrite at that time. They just ask you a series of a couple questions, and there's no underwriting till there is actually a claim, which can be very easily denied at that point. But the other issue I have is as you're paying down your mortgage, you're only covered to pay the mortgage. So imagine if you started at a $500,000 mortgage and it costs you, I don't know, let's just call it $30 a month. All of a sudden you have $100,000 left on your mortgage. It still costs you that same amount. And so, you know, when they ask, like, I know that they get comped for that because it's a business, in my opinion, the bank's a business. You know, my advice is just go separate from a mortgage insurance option and just do like a term or something different along those lines. That's just my own opinion, but I always say no to mortgage insurance.
Funnily enough, I did as well. I always said no. You got to understand also, right? Like once you develop a certain level of kind of expertise and such, then you can always go out and do other things to make money, right? So yeah, I agree with you. I've always denied mortgage insurance. So I was exactly on the same lines as you. When I was going through those potential numbers, definitely a term policy seems to work out great. Let the kids get older, pay down the mortgage, and then You don't need it after the term. You're okay.
Awesome. One last question before we get into our lightning round.
Sure.
So just out of curiosity, what happens if somebody does pass away with the properties that you would own jointly? Would you have an idea on that?
I would. Basically, the executor and the partner would basically have to go through conversations. It'll have to be determined. Again, in the will and in the joint venture agreement, hopefully there's some language outlining a possibility of that scenario to be used as a guide. But I've only seen it in a couple of situations, because most, again, layering joint venture with someone passing away, it doesn't happen as often right now. But the partner and the executor would have to sit down and determine what is the best long-term course of action. Let's say that you're the real estate person, yet you have some kids, something happens to you, the executor might want to sell because they need to raise money for your family. The joint venture partner might be like, no, like, this is passive for me, I'm okay. So it's going to be a lot of negotiation. But at the end of the day, it's like anything, right? It has to be talked through. Hopefully there's some guidance language in the joint venture agreement that will kind of lead, and in the will, that will kind of lead the way and give guidance. And again, wishes should be discussed beforehand. No one likes to do these things because it's a bad situation, but wishes should be discussed, and it'll come down to the conversations of what the executor and what the joint venture partner wants.
So let's just say, for example, my boyfriend and I have a property, and we're joint tenancy.
Got it.
And one of us passes away. Does the government hold stuff until everything is processed? Like, I would still be able to access those accounts, or are they frozen?
The accounts you can access, but the right and ability to sell, you would need to get the clearance first, right? The government would have to clear the file, or whatever you want to call it, and make their assessment. You wouldn't be able to sell it, but no, it would run. You would still collect the rent checks. You would pay the mortgages and all that stuff while the estate is in that executorship stage, right? Where things are just being determined. So, and in joint tenancy, I'm sure there's also some language about these kind of things, right? When you sign that type of agreement. So
Right.
It would just be a thing where, just double check it. But yes, you would still be able to access and everything, but not sell, and possibly not even refinance, by the way, at the government. So that's something important to realize. So
Okay.
get a good lawyer in case if that happens.
The other thing I would just say on that note, as just a little tip, is when you can refinance, just do it, and do it as a HELOC when you don't need the money. Because even if it has nothing to do with people passing away or whatnot, it's just so much easier to do before you're actually urgently in need for it, or even just you have access to money. So if you have a deal, then you can purchase that property without having to refinance if you don't have the cash, something else at that point in time. So it's always good to have, if you have equity and you can refinance, go do it, and just do it as a HELOC rather than a cash out refinance. So your mortgage payments aren't higher, but you've got a line of credit sitting there available.
Fantastic advice. You always have access to resources. It's not about having the resources. It's about being resourceful.
Right.
And whether it's your HELOC, whether it's your joint venture partner, it doesn't matter. I agree with you. Get it set up. You don't have to use it. You won't be charged anything. You'll only be charged interest only when you do use it. So it's a fantastic piece of advice.
Awesome. So Jay, the next part of our podcast is the lightning round. So I'm going to ask you a series of 5 questions, and you're going to give me the first that comes to mind. Are you ready?
Great. Let's do it.
Question number 1. What is your favorite real estate investing book ever?
Real Estate Investing in Canada. Don Campbell, mentor of mine.
Yes, that's a great book. I love him. He's written many great books. Number 2, what is your favorite podcast?
Oh, this is a tricky question. I actually used to listen to a lot of podcasts. John Lee Dumas. I've listened to yourself, Irwin, a lot of real estate ones. I don't listen as much. Favorite one? I'm going to go with John Lee Dumas. I've listened to him the most.
Okay. All right, great. Question number 3, what is your favorite pastime? What do you do for fun when you're not doing real estate?
Sports and chess.
Okay. What kind of sports?
Basically, I was a basketball player my whole life. So love basketball. I love all of them. The only one I don't really watch much or participate in is soccer. Never really caught that bug.
All right, all of them except for soccer. Number 4, if you lost all of your money and your assets tomorrow, how would you start again?
I would basically put together a joint venture presentation. The one thing you can lose your assets. You don't lose your network. You don't lose your connections. I would put together a joint venture presentation, and I would start raising money to buy real estate. It's a wonderful skill to have, and I'm pretty confident that I'd be able to do that if I lost everything tomorrow.
Okay. All right. Great. And great answer. It's not about the stuff or the property, but it's your experience, your network, all of that. Absolutely. Number 5, if somebody has $50,000 and they want to get started, how would you recommend they spend it?
First of all, I'd ask them what their goal is. Is it equity appreciation kind of long-term, or is it more I need to create income off of this? Based on that, there'd be certain strategies. If it's equity stuff, real estate. If it's cash flow, then maybe some private lending, some selling put options, different strategies available based on your objective and your risk tolerance.
Okay. All right, great. So Jay, if the listeners wanted to reach out and know more about you, where can they go?
They can go to www.preparedfathers.com. That's where kind of I hang out. And if they want to email me, they can email me at j@preparedfathers.com.
Okay, excellent. Any final words of advice, Jay, for the listeners?
Yes. You know what? We did not discuss this beforehand. I'd like to provide your listeners with one of those checklists. The one that I find that people get a lot of use out of is the how to manage your finances using your smartphone. So we'll just set up a link, and when the episode gets released, then they can just go to preparedfathers.com/REITE. And that up, they can go and grab that checklist. And that'd be the advice I get, is manage your stuff really well. Manage it well, because it's important.
Excellent. We'll make sure to add that to the show notes and get that checklist, guys. Jay is a great wealth of knowledge, knows his stuff, clearly benefited in terms of, scaling his portfolio and being able to, do what you needed to do in times where, you needed to be there for your family. So thank you so much, Jay, for being on the show. And, thanks for sharing your story as well.
Thanks so much, Sarah. Great. It was great to talk with you.
So I usually don't do outros, but I just want to thank you guys for tuning in again this week to this episode. And let me know your thoughts. Let me know if you enjoyed today's podcast. And also, guys, by the way, I am launching very, very soon, February 15th, the second cohort for the BRRRR course. So if you are interested, there's still a few spots left. The information and the details are on my website. If you click on the BRRRR section, you can hear and see all about it. It's going to be absolutely amazing. Again, I think the students that were part of it, there was about 10 for the first cohort, and they absolutely had some great things to say. It's a combination of Zoom live calls, group calls, and also the VIP portion has us going out into the field and actually analyzing properties on off market, both of those, but also properties that are in different stages of construction or of the BRRRR process. So some of these are my properties, some of these are other investors' properties, but we're going to get to see some really hands-on property, and we can analyze them and apply the information and the knowledge from the courses that we're going to go through and the classes that we're going to go through. And it's a ton of fun. And essentially, for me, I learned by being immersed in it, but over time, not necessarily going to a one-day event and then trying to retain everything. But this is why this class is actually over quite a bit of time. We're starting in February. So we're starting February 15th, and it goes right through to May. So we have a call every other weekend. These are on Saturdays, and then the field days, for those that want to participate in the field days as well, will be interchanged in those times. So guys, if you're interested, reach out and let me know. Love to have you as part of that group. And there is only 10 to 12 people per field VIP, but it is still unlimited if you wanted to do the online. So if you're listening to this from the West Coast or East Coast of Canada or wherever is not close to where I live, or where we're going to see in person, the GTA, then I would say the online one is going to be amazing, and that's going to be a great option as well for you. So on that note, guys, thank you for tuning in, and we'll see you and talk to you next week.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest.